Hello traders, welcome back to the channel. In this video, we'll quickly review last week's market performance, analyze the Nifty outlook for next week, discuss the key technical support and resistance levels, and examine the latest option chain and FII, DII data to understand what the market may be signaling. Let's get started. Let's begin with a quick recap of last week's market action. Nifty 50 gained 616 points, or 2.59%, to close at 24,383.60, reclaiming the 24,300 level after a strong recovery. The rally was driven by better-than-expected corporate earnings, softer crude oil prices, and renewed institutional buying. After starting the week near 23,900, Nifty built steady bullish momentum and climbed to a weekly high above 24,400. Financials, led by Bajaj Finance and Jio Financial, along with IT, FMCG, and metal stocks, were the key contributors to the rally. Bank Nifty also remained strong, closing comfortably above 57,200 after defending key support levels. Institutional sentiment improved during the second half of the week, with FIIs turning net buyers in the cash market, providing an additional boost to overall market confidence. Before we move to the charts, let's look at the key events that could drive the market next week. The biggest domestic trigger will be the RBI Monetary Policy Committee meeting, with the policy decision scheduled for August 5th. Markets will closely watch the RBI's stance on interest rates, inflation, and liquidity, which could significantly impact Bank Nifty in rate-sensitive sectors like banking, realty, auto, and consumer durables. Another major development is SEBI's new F&O closing auction session, effective August 3rd. F&O cash stocks will now trade until 3:15 p.m., followed by closing auction, while stock and index derivatives will continue until 3:40 p.m. This structural change could increase end-of-day volatility and influence institutional trading activity. Now, let's look at the technical outlook for Nifty. On the daily chart, Nifty is trading near a critical breakout zone within an ascending triangle pattern. The immediate resistance lies between 24,400 and 24,450. A strong daily close above this zone could confirm the breakout and pave the way for 24,600, with the next upside targets around 24,800 to 24,900. On the downside, the first support is placed at 24,150 to 24,050. If this level fails, the next important support comes in around 23,900 to 23,700, which also coincides with the rising trendline. Overall, the technical structure remains constructive. A sustained breakout favors further upside. A rejection near resistance could trigger a pullback, while a lack of follow-through may keep Nifty range-bound until a decisive move emerges. Now let's decode what the option chain is signaling for next week. With Nifty trading around the 24,400 level, the option chain continues to show a bullish bias. Strong put writing at 24,300 and 24,400 suggests that traders are building a solid support zone. If the market slips below these levels, 24,200 becomes the next major support, backed by one of the highest put open interest levels. On the upside, 24,500 is the first hurdle for the bulls, while 24,600 remains the strongest resistance due to heavy call writing. A decisive move above 24,500 could trigger short covering, increasing the probability of Nifty testing 24,600 and potentially extending the rally toward higher levels. Let's analyze the participant-wise open interest to understand how different market participants are positioned for the coming week. FIIs continue to maintain a cautious stance. They hold around 1.73 lakh net short index futures along with significant long put positions, indicating they are hedging against potential downside. At the same time, they remain selectively bullish on individual stocks with sizable net long stock futures positions. Retail investors remain the most optimistic, holding strong net long positions in stock futures while actively writing puts, reflecting confidence that the market will stay supported. Meanwhile, DIIs continue to hold large net short derivative positions, which primarily serve as a hedge against their long-term cash market portfolios rather than indicating an outright bearish view. This video is for educational purposes only and should not be considered investment or trading advice. Please do your own research or consult your financial advisor before making any investment decisions.